Let's start off with the fact that we saw some losses coming through in yesterday's session. In fact, it's been relatively choppy trade over the last couple of weeks.
Hello, good morning. Thank you for having me today. The market depreciated further yesterday, but although marginally, on account of the current situation that we have in the interbank market. There is seems to be liquidity tightness returning back to the market after a long time of huge liquidity that dominated the market. I think investors are of the opinion, especially the institutional investors, the PFAs, who are major investors in this market at the moment, are thinking of the fact that very soon this might translate to increased lending rates in the increase deposit rates in the banks, and so therefore it's just like a reallocation of asset class from the equities market. And again, the fact that the current prudential guideline that Central Bank released sometimes last week, operators are looking at it and trying to dimension the possible impact of these on the market, and so the market remained a little bit flat.
Do you think that the 30,000 level is still very much in sight? Could we see that? I mean, you're talking about a bit of a liquidity squeeze, but do you think that could be reversed?
I think the current situation that we have in the interbank market is temporary. We don't expect it to last long. A number of measures are currently being implemented to address this situation, and as soon as the central bank and the banks are able to agree on certain things, I think the tightness that we have in the market will gradually disappear.
Well, just looking at some companies that came out with results, because it is results season, and we've seen quite a lot of companies coming out with some interesting numbers, basically a mixed bag. Just looking at Guarantee Trust Assurance, full-year earnings for 2009, we saw turnover of 4,143 million naira. Were you happy with these results?
Yes, we are happy with the results. Being an operator in the insurance subsector, we are not expecting much from them, given account of what has happened in the industry and in the economy in the last 1 year. But if you look at the gross earning, which of course is a measure of growth, it's improved over what they had in the previous year, which means that they are actually getting additional businesses. And there are a lot of measures that the federal government at the moment and the regulator and the insurance industry are putting in place to ensure that they tap into the vast opportunities in that subsector. For guarantee assurance that was yesterday, the gross earnings, as I mentioned earlier, improved, but the PBT went down significantly over the previous year. Just we think is on account of huge provision which they had to make. It is a company that we think is well managed. As a matter of fact, the current MD came from one of the leading bank in Nigeria, Guarantee Trust Bank, following the acquisition of the bank of the insurance firm by the bank. And we think they are well positioned. They have asset management. They are equally into other property management. So we think going forward, there are opportunities which the company will want to tap into, which may change their profitability, which may enhance and promote their profitability going forward.
Looking at Burger Paints, a company that also came out with results and in fact giving out a dividend, half a naira per share. So a company that is out there giving a dividend, would you be accumulating Burger Paints at this stage?
Yeah, a couple of companies released results yesterday and they gave dividend. One of it, as I mentioned earlier, is the Guarantee Trust Assurance that gave 4 kobo. Another one is the Budget Paint that gave 50 kobo. That's a massive improvement over 30 kobo they gave the previous year. But if you look at the performance as well in terms of the turnover, a decline, and that one again is not, the reason is not far-fetched, although we have not seen the for full audited accounts, but I mean we can link it to the fact that there is a slowdown in the construction business in Nigeria, the estate management and the real estate developer. There are slowdown in that sector, and that impacted on their gross earnings. But again, if you look at their PBT, it went up marginally, and that's why they are able to pay good dividend. But the only thing that we do not have, we don't like about the way they release it, so it's such that it's going to be adjusted for that dividend today. So investors who would have loved to participate in that good dividend only had yesterday as the only time to do that. So they didn't give enough room for investors who want to come into the place. And again, given the fact that the dividend yield is very good, over 5%, which is better than the deposit rate that the bank is offering, around 3-4% at the moment in the market. Ayodele,
looking at the headline inflation number which came out for April, 12.5% is what we saw. We know money supply is growing quite rapidly as well. Quantitative easing has been quite a big strategy by the Central Bank of Nigeria. Where do you see inflation going from these levels? Currently, as I said, at an 11-month high, do you think that we'll be seeing some kind of move by the Central Bank to try and curb inflation?
Yes, the inflation figure that was released that we saw yesterday, over the weekend, giving us 12.5 year-on-year, is in line with our forecast in FSDH Reseaerch. We had released a forecast of 12.5 to 14.5 this year. We said in the medium term we're going to have inflation of around 12.5 going forward, 14.5 to that range to end the year. But for me, I think that shouldn't be a source of concern for us. It's just like a trade-off. The central bank, the focus of the central bank at the moment is just to encourage banks to lend to the real sector of the economy. And when you are, implementing such policies, accommodative monetary policies, you should expect that you relax inflation figure. And so the central, the focus of the monetary policies at the moment shouldn't be actually on inflation. At 12.5 to 14.5, our forecast I think is still manageable. But what they should do is actually to ensure that credit flows to the real sector of the economy. Interest rate, the lending rate comes down from the level of 12.5, and from the level of 18%. That's prime rate. We had actually expected Central Bank as well to reduce the NPR to 6%, as in the NPR now is 6%, but the effective lending rate to the deposit money banks is about 8%, we have the 12%, 2% above the NPR. But we said effective lending rate should be 6%, and more so now that the Central Bank is going into the area of linking the lending rate to NPR, I think is very important. So I think for now it's actually how to boost output rather than worrying ourselves so much about inflation, which is I think is manageable at 12.5.